What is up, guys? My name is Darren Jackson. Welcome back to the channel. And have you seen this? The growth of this company the past couple of days has been insane. I've honestly never seen this much growth on my portfolio within this short period of time. And that's all thanks to a lot of news and a lot of things that's been going on with this Torchlight and Metamaterials merger. And we're gonna talk about all three of those things. That's gonna include things that we already know, some news that we just found out, and one particular subject that a lot of us may have already known, but I never really thought about when it pertains to Torchlight, nor have I actually talked about with you guys on this particular channel. So by the end of this video, the goal is for everyone to understand what exactly is going on with Torchlight, what has been going on over the past 24 hours and going into the end of this week, so we all kind of understand more of why this price has not only increased but shot up significantly over the past couple of days. So the first thing we're gonna talk about, the first news that was gonna explain why the actual price is going up, is the fact that the merger was approved. So I've made many videos in the past about why Metamaterials and Torchlight are merging in the first place. So if you guys are interested in those, make sure you check those out. But to quickly summarize it, Torchlight wants to make more money by joining a company that's more in the tech/renewable energy sector, and Metamaterials wants to make more money by getting with a company that has money already to put towards its nanoweb technology, which is basically the foundation of their entire company. And they also want to be able to qualify to join the NASDAQ, which will make them more accessible to investors, which would therefore help them make more money. It's all about money. It's a stock market. We all get it. This merger was announced back in October of 2020. There's been a lot of hype built up until this very moment. Now, on Friday, June 11th, the Torchlight Board of Directors hosted their special shareholders meeting, which basically consisted of them finalizing all the votes that us as investors have put in from our brokerages within the past couple of weeks or a month or so, and ultimately deciding if Torchlight and their board of directors agree upon the merger between themselves and Metamaterials. Keep in mind, Metamaterials and their board of directors had already agreed to it at least a few months back. And of course, to not our surprise, the merger was approved upon. And knowing that, we're aware that the merger will finally take place this Friday on June 18th. So just the anticipation of the two companies coming together made the price go up. Whether you actually believe in Metamaterials and what they have to offer, or you're really anticipating the short-term profit that you'd be getting from Torchlight being an investor through them, which leads to the second reason why the price itself has been going up, and that's the record date. Now, the record date is the last day that you have to be an investor of Torchlight to be qualified for what's called their Class A preferred stock dividend. Now, I'm not gonna go into details in this video about what that share dividend is or how it came to fruition, but I definitely have some videos where I talk more about that. But basically, we were aware that the record date was going to be announced at some point after the shareholder meeting on Friday, but I had no idea it was going to be announced this quick, let alone the following business day. So on Monday, June 14th, Torchlight announced that the record date will be set to June 24th, which is about 2 weeks from now. So what that means is that if you're an investor that's interested in investing in Torchlight, whether you actually believe in the company and the company they're merging with, or you're just interested in the hype behind them and the potential of the amount that the preferred stock dividend will be, then you have until June 24th to invest into Torchlight. So that means by the end of the trading day on June 24th, the amount of shares that you hold of Torchlight at that point will determine what you get from the preferred stock dividend. So it'll be what they announce multiplied by the amount of shares that you currently have. So if you're really interested, I would suggest you guys buy more, but again, the price has gone really high. But again, if you're a long-term believer, that shouldn't matter at all. So those are two of the three reasons why this price has gone up. But I really feel like the third reason is the most significant reason on why the price has just significantly, almost exponentially increased over the past couple of days, not just gone up. And that has a lot to do with a process called short squeezing. But in order for us to understand what a short squeeze is, we really need to understand what short selling is. Now, I've talked about short selling before on this channel, but not when it pertains to this company, and that was a long time ago. So I'm gonna explain this in the easiest possible way that I can. So just like many of you guys, I'm sure, when I was introduced to investing in the stock market, my whole purpose was to put money towards a company that I thought was going to do really well over a given period of time, so that when I took that money out, I had more than what I put in. I made a profit off their profit. However, it is very possible to make a profit off a company's demise. There's a lot of companies that have been impacted by that. It's kind of unfortunate, but unfortunately, it's the name of the game. Now, there are companies out there that specialize in using money that is taken from their members and investing it into pretty special ways, not just buying stocks, but doing options on stocks and being able to do this process called short selling. And those group of people and those companies are called hedge funds. Now, here is a basic example of what short selling would be, really basic. So let's say I myself notice a company called Company X and I feel like they are on the downhill. For some reason, I believe they're not going to do well within the next month or so. Currently, their share price is $10 a share. So in order for me to initiate a short sell to make a profit, I'm going to borrow 100 shares of Company X from my broker, which we'll say is Robinhood, for example. As soon as we initiate that borrow, I will immediately sell those shares and I will take in that profit. So at that moment of selling, the share price of Company X is $10 a share, which means I profit $1,000. But let's keep in mind, Robinhood doesn't necessarily care about how much money you owe them. They care about how many shares you owe them, which is based on how many shares you borrow. So at this point, I owe them 100 shares, which conveniently just happens to be $1,000. But I'm anticipating the stock price to go down because I'm anticipating the company is not going to do well in the future. So let's say within a month, the stock price does exactly what I think it's going to do, and it drops down to $5 a share based off bad news on the company, people on the board of directors getting fired, whatever, bad products, etc., etc. The stock price drops to half. So we're at $5 a share, and I decide to buy back 100 shares of that company. Because again, I owe Robinhood, or my broker in this example, 100 shares of that company despite the price. But this time, the price is not $1,000, it's $500. So I then take that 100 shares, give it back to them, and I profit the remaining $500. That's basically what short selling is, and that's how you can profit off a company's demise. There are other ways you can do it, but that's the way in question. So keep in mind, that was just me as a retail investor that makes a decent amount of money, but imagine a hedge fund that is using the money from multiple people to help them make more money, and we could be talking about tens to hundreds of millions of dollars depending on what company they're actually going towards. So they could really move and shake the actual stock itself if the company's price goes down. And another thing to keep in mind is that the potential profit that you can make from doing a short sell of a particular company is based upon the share price of that company when you borrow X amount of shares and you immediately sell them, multiplied by the amount of shares that you borrow and immediately sell. So in this example, assuming that the stock price actually drops down somehow to $0 a share for Company X, then you would take $10 multiplied by $100, and that means the maximum profit you can make is $1,000, because when you buy back somehow $0 per share stock and give them back 100 shares of that, it's worth nothing. And that's assuming you could do that. However, the amount of money you could lose is infinite. And that's where we come into the situation on how it's impacted companies like Torchlight. So of course, we all know that bad news in regards to a company can help the stock go down, but good news for a company can help the stock go up. And including the first two reasons that I've talked about, just the fan base of Torchlight and a lot of the retail investors that have been investing in the Torchlight have helped the stock price go up. So whenever the stock price goes up, if you're in that position to where you're short selling, then that means that you're starting to owe more and more back to your broker. So if you initially borrowed 100 shares of Company X at $10 a share, and a month later it goes up to $20 a share, then that means when you give them back 100 shares, not only do you have to give them back the $1,000 it was initially at, you have to give them another $1,000 since 100 shares at that point is worth $2,000. And that price could keep going and going up. So what's happening right now is that a lot of retail investors and a lot of believers of the company, of Torchlight, of Metamaterials, who's ever interested in the dividend, et cetera, are buying back into the company. And the only way that hedge funds and other people that are short selling this company have to avoid spending even more money is by ending their contract. And the way they'll do that is by continuing to buy back in their 100 shares or how many shares they borrowed and give it back to their broker so they can end that contract. But at that point, the amount of money they owe to their broker is more money than what they borrowed. And if they wait too long, then they're paying back a lot more money than they once borrowed. Now, what that also does to help the price of the stock go up exponentially is that when they're buying back in, especially if they're hedge funds, they're probably buying back in hundreds, maybe even thousands, tens of thousands, and just hypothetically even millions of shares of this company. And if you're a regular investor and you buy millions of shares of a company like Torchlight, you alone are making the price of this company go up. So let's imagine that it's multiple hedge funds on top of people that are potentially pulling call options, which I'm pretty sure you can't do a call option on Torchlight, at least not on Robinhood, but I'm just using this as an example. The point is, a lot of shares of Torchlight are being bought, and it's forcing a lot of people that had high positions with negative mindsets to buy even higher positions with higher amounts of shares, which makes the stock price go up even higher. And that's the reason why Torchlight is shooting up exponentially and has shot up exponentially over the past couple of days. This is something that's happened with other companies such as Tesla and more recently GameStop, Nokia, BlackBerry, and AMC. Now, there are ways to be able to have an idea of how shorted a company's stock is, and one of the ways is by finding out the percentage of shorted stocks. Now, I went on a particular website, I think called fintel.io, and I saw that as of Monday, June 14th, the percentage of shorted stocks that Torchlight had was at 17%, which actually calculates it as being super pessimistic, which means if a situation like this turns it around, then that pessimism can turn to optimism like nothing. And in order to get that percentage, you're taking the amount of shorted stocks within Torchlight and dividing it by the average volume of that company's trading stock in general. Knowing that it's really pessimistic definitely gives you an idea that if people start to buy back in, whether they're retail investors and they're doing it just to go against the man or whatever, or actual news comes out about the company that makes it shoot up, then you know it's going to push people to end their shorted positions to make the price go up even more. So with that being said, that's why I feel like the short selling is the biggest reason why this share price is going up. Of course, a lot of other great news is happening, and I'm personally a long-term believer of Metamaterials, and I'm really excited about this preferred stock dividend. Hopefully it's more than $1 per share, but we're gonna have to see. But guys, let me know what you think about all the news that's been coming out with Torchlight, about this preferred stock dividend, the merger being approved, Metamaterials, the short selling. That's not really a level of my expertise, so let me know if I've missed anything in the comments below. Hopefully you guys enjoyed this video. And speaking of videos, make sure you guys check out some of these other videos, which I hope help you guys on your investing journey as they have in mind. And until next time, take care.